Good morning. This is Arlan Suderman, Chief Economist, Commodities Economist at StoneX. It's a little before 9 a.m. Central Time on Monday, April 14th, the day before tax day, folks, in the United States. And let's take a look at the markets as we start up this new week of trading. Stock futures surged overnight, and we see continued strength this morning after President Trump made some carve-outs for electronics. But then he clarified yesterday, along with Commerce Secretary Lutnick, that there are more tariffs coming and that this is a temporary carve out. Nonetheless, it did give some support to the markets, particularly the sector overnight. We saw China's stock market rally as well, hoping that this was some indication that maybe there's room for negotiation. Both sides have really just taken the tariffs so high now that it's a pretty cold relationship between the two, and each side is waiting for the other side to pick up the phone. I do expect those conversations to start soon. How long it will take to actually reach an agreement is yet to be determined. President Trump's going to have to allow an out, so to speak, for President Xi Jinping to be able to save face in front of his people while still negotiating an agreement. And I think President Trump understands that based on the relationship that they had during 1.0. We're also seeing kind of the Federal Reserve work its put options, so to speak, strategy, continuing to do things behind the scene. We've seen it keep the economy going by increasing liquidity without really changing its policy. We've seen overall reserve balances increasing by $95 billion last week to $3.47 trillion, which is their highest level since January. The Fed continues to slow quantitative tightening as well. And you may recall that I talked about anticipating it would do that all the way last fall, and that was well before the tariffs, but that helps stimulate the economy as well. And it's doing other things behind the scenes to help support the markets, help support the economy. Some news out of Argentina over the weekend was certainly positive for it, and that's where President Milei is also restructuring the Argentine economy away from one that's dependent upon government and onto the private sector. And if he's successful in doing that, he could unleash a powerhouse of agricultural commodities available to the world market. And he was facing some commitments and some debt obligations to pay, and the International Monetary Fund at the end of last week approved a 48-month extended fund facility arrangement for Argentina, totaling $20 billion, while providing an immediate $12 billion disbursement to help the country meet its immediate obligations. That buys President Milei some more time, some more flexibility to continue forward with his reforms as well. And if that continues to be the case, we could see Argentina increasingly take on a greater role as a competitor to the United States in the agricultural commodity sector. Overall, as we look at the commodities this morning, we see that energy is bouncing modestly this morning, really in that $60 to $62 area. We're seeing a lot of consolidation. President Trump has indicated he wants to see crude oil down around a $50 barrel area to really stimulate the economy, but that's a lot below the cost of production for most producers here in the United States, and would simply shift more of that production to OPEC countries as we would start scaling down production, ratcheting down production here in the United States. So that's providing some support now for the economy, or for the crude oil market. We saw some big gains in the grain and oilseed sector at the end of last week. Soybeans and corn trying to participate a little bit more in that today. Overall, we saw, excuse me, we saw overnight some profit taking. That profit taking is extended into wheat contracts this morning to where we saw some double-digit losses in Kansas City, really getting ahead of itself. We did see some rotation of money coming into the grain and oilseeds. If you think about it, way some fund managers are looking at it, the grain and oilseeds are a sector of commodities that has not performed well the last several years. They've really been outperformed by other sectors and been kind of left behind, and that made them a little bit more attractive. Also, if you're going to put retaliatory tariffs on the United States, do you want to put retaliatory tariffs on food-based commodities. That's kind of the thinking. China has done so, but China had already been scaling away from purchasing from us. And we do have some improving fundamentals with some weather-related risks and some relatively tight stocks among exporters here in the grain and oilseed sector as well. Not saying these fundamentals are ready to stimulate a big bull market. I'm saying this is more of a money play move. We saw some end user buying in there as well to take advantage of these prices that had been prior to this at multi-year lows in some cases, coming in, doing some value buying. So at this point, I've been saying that we have to watch to see the VIX drop below 30 to really sustain a rally in any particular commodity unless that commodity has a strong story. The VIX had traded as high as 60 during this tariff war, traded as low as around 32 this morning. So we're inching closer to that 30 level. Not to say that's necessarily going to trigger an automatic rally in these markets, but it does help free the markets up as that fear level on Wall Street starts to decline once again. At the same time, if the stock market starts performing better, you also lose a little bit of that money rotation looking for alternative investments. So as we go this morning, we're seeing mixed trading in the corn and soybeans, weaker on wheat, kind of a consolidation day at this point, watching the headlines, watching where we go from here with the Trump tariff policy, and we'll continue to watch. It's a holiday shortened week with the markets closed on Friday for Good Friday holiday right ahead of Easter, and of course the headlines probably continuing to flow. This is Arlan Suderman. Look forward to being back with you once again tomorrow as we follow these market developments.